Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin. We're going to be having a look at the latest Bitcoin news today, and also jumping into some technical analysis and giving you my thoughts and opinions on what I think is likely to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out today? And we're going to start things off, guys, I think, by taking a look at some recent news for Bitcoin. So I will start things off with basically Bitcoin struggling to stay above 30K. This is pretty obvious. I think there's a lot of stagnation in the market, basically not really knowing whether we're going to go down or to go up. And we really are struggling around that $30,000 level. And I'm going to go through a little bit of the details in the technical analysis in a moment. So basically, Bitcoin is trading just below 30K at the point of this article coming out yesterday. And obviously, Ethereum is facing very similar kind of struggles. Now, I'm not going to go through a lot of this, in detail, but the main thing really is to talk about, why there is, Bitcoin carnage, as they kind of label this one here. Who's to blame? And they're basically saying big money. So crypto has always been considered a retail trader's haven. With Wall Street kind of staying out, for the longest time due to wild volatility and lack of definitive regulations. And this still pretty much is valid, but we are seeing a little bit more in the institutional level players kind of jumping in, and this has definitely changed over the last few years. So yeah, it's a little quote here. Basically, retail investors are no longer dominant in the crypto space. This is pretty much because they've been shaken out so many times. They kind of just think it's a big scam and will tend to avoid it. However, ultimately, what you're actually finding are that institutions, whales, really large players, and some traders from bigger industries are actually coming into this space and are kind of trying to take it over. So the largest portions of daily crypto trading volumes is from crypto institutions, which we kind of know, much of which comes from them trading with each other. Retail traders are dominant around about 4 years ago, while Bitcoin was trading at about $10,000. So pretty interesting kind of stuff that essentially, I think it's important that we understand how institutional level players operate in this space. It's not as clean cut as thinking that they're just going in there making market orders. They actually rely on pockets of liquidity that are created through two different kind of things. One is leverage trading. Okay, so when you open up a leverage trade, you create basically a liquidation level, right? And basically, if lots and lots of retail investors go ahead and use leverage, what they're finding is that there's going to be a little pocket of liquidity that can be mopped up by those institutional players, right? So which is why we don't tend to do or talk about leverage, because it's high risk. Okay, if you don't know what you're doing, you're going to get absolutely wrecked. And obviously the second one is stop losses as well, right? You could have a stop loss, or just buying and selling the assets straight away, but the market makers know where that price would be for you to sell, so they could just move the price to a specific area, basically force your sale, and then move the price back up again very, very quickly. And again, this is something that you see quite a bit on a few exchanges as well. So I understand that, if you're going to do any of those two things, understand the risk. Me personally, I try to do manual stop losses. So I watch the charts and that kind of stuff. And I will only put a stop loss on if I'm away from the computer for a significant period of time, for example. And obviously, I don't use leverage trading and things like that. Okay, so that's kind of the first thing here. I thought it was quite interesting just to kind of see who's been blamed for this, big money being pulled out, etc. And I don't think that's really necessarily true. I think there's actually accumulation going on, and I'll get into that in a moment. The other thing to kind of take a look at is that Bitcoin may have dipped, but more big money is coming in, right? So retail investors are being shaken out, and we're seeing more investments from for crypto firms, right? So we're seeing crypto firms basically start to get a lot more funding, and again, I think this just comes at the expense of the retail investor. So again, I'm not going to go through this in great detail. I just kind of really found it quite an interesting one. I'll link all of these into the video description, guys, so that you guys can take a look at them. But essentially here it's the same thing as before. What we're doing is we're witnessing basically big money coming into the space from institutions and wealthy individuals, with the regular retail investor kind of being shaken out of the market because they're not exactly sure what is going on. And then of course we have the last one here, which is, are we heading into a bear market worse than a dot-com era and 2008 crashes, says a 37-year-old veteran trader. Now I'm not 100% confident on this one. So it's a big statement, obviously. So Bitcoin is trading, blah, blah, blah. We know all that kind of stuff. But we're in the early stages of potentially, which has the potential of the deepest bear market of my life. The market closely continues to decline, which is the second inning. A lot more to come in the opinion here. Now, I'm not of the same thinking as this, right? Because I think there's lots of different ways you can look at the market, right? You can look at it through the lens of a bear, or you can look at it through the lens of a bull. But essentially, if you just kind of don't label things either way, and you actually just take a look at the patterns of the data, there are different variables that we have this time around that we just haven't had previously. I spoke about this a little while back, right? Essentially, if you take a look at the 2013, 2017 bull runs, and obviously the bear markets that followed, those bear markets, they lasted for just over a year before you actually reached the bottom. It's not like they actually went down significantly for a long period of time. It was actually the kind of 750-day period that actually went from the bear market bottom to the previous all-time high period that was really, really slow and took a bit of a grind. With that being said, though, it is also worth kind of pointing out that at those particular times, we had nothing but inflows for Bitcoin onto exchanges, dramatically large amounts of inflows. So basically, the net difference of exchanges was that the exchanges were flooded with Bitcoin. Okay, so much Bitcoin that the demand was easily met, and the price could continue to go down or really be slow and stagnant in how it was kind of going back up again. So this article is an interesting one because it also kind of goes the polar opposite of what you're also seeing from the institutional players. So what we've actually got going on now is accumulation. We're seeing more Bitcoin leaving the exchanges over the last few months, and that is continuing, right? We are continuing seeing have a continuation of that accumulation going on, and again, that's a variable that hasn't been seen before. So we cannot look back at the history and say we're going to have exactly the same results, or we're going to go down into these kind of really bad bear markets, when actually the variables are actually really positive for supporting the bull market scenario. Now, with that being said, though, that is the only variable that is different, right? We have, of course, if we just take a look at those EMAs, closed below the 20 EMA in the 2013 or the lead up to the 2013 or 15, I should say, bear market low, and the 2018 bear market low also closed below the 20 EMA, and we have closed below the 20 EMA as well in 2022. So these are obviously, and we'll talk about the weekly 20 EMA, by the way, guys, but essentially this is basically exactly the same. Every single time we've closed below the 20 EMA, we've gone down to the 50 EMA on the weekly, right? And essentially that's been the bear market low. So we've done all of those things. Depending on what data that you look at, we've done all of them already. Okay, so the only variable that is different is the fact that we haven't had this level of shrinkage of supply on the exchanges, which could be a big trigger when the demand kicks in. So to think that we're going down significantly low, and I've seen a lot of crazy kind of numbers being thrown out there, $10,000 Bitcoin. Now, these are all possible numbers. They're all very, very possible. It's just, I don't think they're probable, okay? So we have to understand those things. But I will link this into the description, and you guys can kind of get a look at this, right? Because even the pandemic crash in March of 2020 wasn't as low as the bear market low that was actually achieved in December of 2018. Okay, so we have to understand that you can pull down, yes, but you cannot necessarily call out for some crazy numbers when even the worst scenarios, haven't been able to do such a thing. But on that note, I will also bring up some Glassnode data, because we were just talking about inflows and outflows and shrinkage of supply. Here we can see the inflows for yesterday were 46,000. The day before, they were down at 17,000. If we come to the outflows here, you can see that the day before they were 19,000, meaning that we had more going out. And you can see that yesterday we also saw 57,000 Bitcoin going out. So we have more outflows than we have inflows. So again, we aren't seeing a mass sell-off event here. We're not witnessing a lot of Bitcoin just leaving the exchanges. What we're actually witnessing is accumulation occurring, and usually this accumulation occurs at the expense of retail investors, if there are any left in the space at this point. But the other thing I want to take a look at, obviously we can take a look at the balance of Bitcoin on exchanges. You can see how it's spiked up as Bitcoin was flowing into the exchanges. It doesn't necessarily mean that those whales were selling it. They were just moving it to the exchange. They could have sold, they could have bought back. But I think the most part here is actually just kind of, I guess, putting out that fear, right? If you see a lot of crypto whale alerts going on and you see that Bitcoin moving from wallets to exchanges by the bucket load, you tend to get very, very scared that a dump is coming. But that's usually all that's required. It's an old tactic in the book where you can actually put Bitcoin onto exchanges, or even set up fake orders for that matter, to make you think that something is going to happen when it doesn't. This is an institutional whale player game that happens all the time. But nonetheless, you're starting to see Bitcoin on the exchanges come back down quite rapidly. But the other thing that's worth taking a look at, and I like to look at this one as well, is to see what the whales are doing, see what the sharks and dolphins are doing as well. So here you can see that basically in February they spike up massively here. This is basically wallets with more than 1,000 BTC. You can see how they spike up a little bit more, they pull back down, and they pull back down a little bit here. But again, I'm not seeing this as a huge shakeout of these 1,000 BTC wallets. Instead, what we're actually looking at here is a drop from a 2,290 to 2,110. So essentially we've lost 80 whales with 1,000 BTC at that point there, but there are still well over 2,000 of them total. So from a percentage shrinkage point of view, we're talking, very, very insignificant numbers at this point. Probably, what's that, 4%? Maybe a little bit less than that, but around that kind of area. So yeah, really interesting kind of to kind of get a good take on what's going on there. But when you take a look at the sharks, you can actually see a steady increase here as the sharks, so this is 100 BTC, are accumulating. They haven't had any major shocks here. As that price has pulled back down, they've spiked up and they've basically just accumulated more Bitcoin at the expense of anyone who was selling or getting liquidated. The same story here for these dolphins. Pretty much from February, they've been accumulating. This is 10 Bitcoin or more. And again, they see the price pull back down and they just continue to accumulate and build up their positions in BTC, even during these kind of times where people are calling out some crazy bear market lows. So it's really important that we kind of take a look and understand, what's going on from all of that kind of perspective, all of that news and kind of data that we have at our fingertips. I think it's important that we actually use this information to help us understand what's the most probable outcome, right? Rather than just getting really emotional about whether or not we're in a super crazy low bear market where we're going to go down to $10,000, which of course would completely break Bitcoin's history, which I'm fine with. There isn't a huge data set there. There's not a lot of data to kind of go to and to rely on. And if we do go down to $10,000 BTC, that's the first time in Bitcoin's history that it's ever gone down lower than the previous all-time high. Okay, so although it's possible, I don't think it's necessarily probable. It would break a lot of the old history. I mean, there isn't a lot of it, but it can be broken and we can set new history. It would of course mean going further forward, analysis is going to become incredibly difficult, right? Because a lot of the things that are being used and spoken about now, using that historical data would basically be invalid, right? None of those theories that are currently out there would be valid whatsoever. So, in doing so, it's possible, of course, that we have these massive crashes. And it's also possible, guys, that Bitcoin could go on a macro, across multiple years, crash down to about $300. It's also incredibly possible. It's also possible for BTC to go down nigh on to zero in the same way that Luna did, right? These things are possible. It just doesn't necessarily mean that they're probable. And very, very different things to kind of get our heads around. But let's jump into some technical analysis on Bitcoin, right? So what's actually been going on here with BTC? On this hourly chart. So we're going to start off with the hourly, right? Because we had a couple of key targets for Bitcoin, some key areas that we were trying to target and trying to head towards. We obviously were originally talking about 33,900. I've left that target there because, we were thinking that's a possible scenario. But we also have a slightly lower target of 32,100. Again, this is also another area that is incredibly possible. So what we've got, and I'll run you through this. Basically, the market's been very, very stagnant. But basically, originally I was looking at this kind of move just here, a large ABC structure like that. Okay. taking us out towards that $33,000. Then we obviously started to see this pull back here, and I was like, okay, well, here's another potential move, right? And that takes us out to those $32,000 range. So this is the one that's most probable right now because it is a sub-wave count, and it is possible that actually extends out and goes a little bit higher. But for the most part, I am looking at 32,100 as the kind of key area for us for this next move up. Now, when we take a look at the stochastic RSI on this hourly chart, it's not exactly going to give us a lot of confidence. And we're going from oversold to overbought in very, very quick time without actually doing too much in the way of price movement. And this is basically telling us the sentiment of the space. The sentiment is not to buy, it is to sell. And again, you know, if we take a look at the volume, you can see exactly that. The price pushes up and the volume drops down. So getting to 32,000 is going to be incredibly difficult, at least until we have some kind of mini correction here and then maybe a swing to the upside later. And the reason for this is if we take a look at that 4-hourly chart, the same thing here is actually not quite going, the same thing is not exactly going on here. So what we've got is basically the stochastic RSI lowering down, okay, as the price was pushing up a little bit. So on this 4-hourly chart, we actually have a little bit of confidence, and the confidence is coming in ever so slightly, but the volume is still dropping. But basically, this will allow us to move up in that stochastic RSI up towards our $32,000 level. But we should expect some volatility on that journey. Okay, we wouldn't necessarily look to come down lower than our B wave low. Okay, all the way down here. So A, B, and that C wave. So origin down here, we shouldn't cross down lower. And if I come back down into my hourly chart here, I'll just tell you exactly what that is. That's coming in at, we shouldn't go down lower than 28,600, 28,660, I think. So we want to stay above that level, but that 4-hourly chart gives us confidence to say that there's some kind of move up. The 8-hour chart, though, is actually telling us that we can come back down. Okay, we've got room to fall down. Now, with that, we can, of course, jump up very briefly before having that pull back and taking us into those lower ranges again. And likewise, the daily is actually progressing up more than we would like it to without actually doing too much here. And again, this actually then lines us up nicely with thinking about where this end correction is likely to go. Because if we do surge up to that 32k low, then we are talking about moving down into a 5th wave crash, which obviously is more apparent if we take a look at that from a 4-hourly perspective. If we come up here, you can see we have those 5 waves move, right? So we have basically 1, 2, 3, 4. We're looking for 5 waves inside wave 5, taking us to $22,967. That there is what I believe the bottom of this corrective move is likely to be, and where we are then looking for a move to the upside. Okay, so for the most part, we've got quite a few different things kind of going on here. There's a lot of things that could potentially be, you know, confusing and all that kind of stuff. Essentially, if I bring up in our hourly here, we are, of course, talking about just moving up towards $32,000. Once $32,000 has come in, I do think that we have a high probability of creating a 5-wave structure to the downside, where we actually should hit the bottom at approximately $22,967. Time-wise on this, it's going to take some time. It's not going to be instantaneous. And, you know, I don't think we're likely to see this kind of play out until probably some point in June, by the time we actually go down to 22,900. So considering how long it's taken just to get up to 32, that's a little bit concerning. It could mean that we actually have a sharper decrease and that happens faster. Timing in the market is incredibly difficult, but one thing I'm confident on is a slight move up towards $32,000 Bitcoin and then a drop down towards $22,967. So guys, I am going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.